There's a massive buying opportunity on volatility 25 1S index. So for those of us that trade the DERIV synthetic indices, I would like you to stay with me as I break down this opportunity and show us how we can hop in and take advantage of this particular index. Believe me, if you're able to catch this trade, you can hold it for the next 2 to 3 weeks and make massive amount of money from it. So without wasting much time, let's get to it. I'm currently on the monthly time frame, and on this time frame, I basically try to mark out my key zones and also get my directional bias. So for those of us that do not know how to map out key zones, I have a video dedicated to it on the channel. So key zones are basically rejection zones on the chart that serve as either support or resistance. So that's simply what the zones help us to do. They help to tell us the best possible place to jump into a trade, especially for long-term trade. And I like doing this on the monthly time frame. So you can see that it didn't take me much time, and now I'm done with this. And the next thing I get to do would be to get my directional bias, and that's I can simply do by looking at the market structure. And volatility 25 1S prints out a beautiful market structure in the sense that we can clearly see its uptrending fashion, giving us higher highs and higher lows. So the market gave us a high, it was a higher low, a higher high, a higher low, a higher high, higher low, higher high, and the market's currently retraced into a major key zone on the monthly time frame. Hence, my initial take that if you're able to catch a trade here with buyers already rejecting price at this key zone, then you can hold it for quite some time and make a whole lot of money. So the next thing would be to go to the weekly time frame. On the weekly time frame, I mainly try to look first of all to see if the structure confirms what we've seen on the monthly time frame, and then to also add certain tools that I use in my analysis. And one of those tools would be my trend line. So if I include a trend line here, I can see that the market clearly is in an uptrend. And from what I can also see, I see that there's an opportunity to include like an internal trend line, which still shows us that the market is in an uptrend. Now, the reason for this internal trend line is that it gives us recency bias in the sense that we can see that the market will take much longer time to give us another touch of this outer trend line rather than compared to it already making a touch of this internal trend line. And we can see as well that there's a big rejection, even though it broke the trend line, but there has been a big rejection back into the trend line. So the next thing that we'll do would be to see if we can add like a Fibonacci retracement tool. But from what I can see, the market has made like an almost 100% retracement back to the higher low. So of course, we know that in an uptrending market, we try to buy as low as possible. In other words, we buy at what the higher lows of the uptrending market, and the price is currently at this level. So the next thing would be to go to the daily time frame to see also if what we've seen on the weekly time frame can be confirmed on the daily time frame. And from all indication or from everything that we can see that the market still maintains its uptrending fashion. But if we are to look at the structure of this market closely, you can see that at some point the market formed an inverse head and shoulder pattern here, and the market shot up, came back down, gave us a double bottom. The bottom was retested, and then price shot up after giving us another double bottom here. And from what we're seeing now, it seems price just came back down to retest the neckline of this bottom and has succeeded in grabbing liquidity from this neckline by coming all the way down, albeit to test this major key zone that we drew from the monthly time frame. Now, having all this in mind, the question would now be, like I promised, how do we take advantage of this setup? Now, to do that, we have to start going gradually to the hourly and then down to the minute time frame to see how we can get a perfect or an almost perfect entry that we can confidently hold for long. Imagine getting a trade at this zone and then holding it all the way up for weeks. So the next thing would be us going to the 4-hour time frame, one of our entry time frame. Now, one entry criteria that I had always preached in time past, so I can take this trend line out now. Now, one entry criteria that I have always preached in time past had always been the counter trend line. So the counter trend line simply means drawing a trend line and against the original direction of your again against the direction of your original trend. Now, we've been looking at this market in an uptrend from the monthly to the weekly and the daily time frame. Now we've gotten to our 4-hour time frame, which is one of our entry time frame. And the first thing I can draw here is the counter trend line, which is against the uptrend that we've been observing. Now, first, this is my first entry criterion. And then the next one would be to look at the candlestick chart pattern. Remember, on we're at a very, very strong key zone that we saw from the monthly time frame. So first thing first is that my counter trend line has been broken aggressively. So if we're able to get a retest of this trend line, then I can start taking my trade. That's number one. Then number two, I can see beautiful inverse head and shoulder pattern, which is a strong bullish reversal chart pattern. It simply means that when the price of the market is going downwards, and this chart pattern shows up, then there's a strong probability that price is about to reverse and start going upwards. So I'll come here and map out the neckline of this inverse head and shoulder pattern. Then I can as well mark the other areas of this chart pattern. So I have the neckline, then I have the left shoulder, the head, and of course the right shoulder. If I zoom in also, I can as well add a mini trend line here, giving us one touch, two touch, and we're expecting a third touch of the trend line. So there are a few things that I've put together here. We have our inverse head and shoulder chart pattern. We have our counter trend line break that has been broken aggressively. We have a new trend line, a new bullish trend line, mini trend line, such that if price should come down to do a retest, it will be retesting two trend lines at it will be testing two trend lines at a time, making a third touch of this one and retesting the one that has been taken out, and as well as retesting the neckline of an inverse head and shoulder pattern. So if you put all this together, that's enough to give us confidence that once price gets into this place, then it will be time to take our trade. Now, to refine this setup, can go to the 1-hour time frame. Now, on the 1-hour time frame, we can see that price is already coming downwards. So just to beautify the setup even more, on the 1-hour time frame, I can decide to do this. To add my words, my Fibonacci retracement tool, and we can see that everything aligns beautifully in the sense that our Fibonacci retracement tool key zone is resting beautifully on the neckline of the inverse head and shoulder pattern. So you wouldn't need more than this to know that once you are able to monitor this particular setup from time to time and see everything now that I've stated and put together to form this confluence, that you can confidently get into this trade and hold it for the longest time possible. So imagine if you're able to get into this trade here, you have your stop loss here and your take profit will be all the way here. So this is massive, and that's why I decided to share it with those of us that trade the DERIV synthetic indices. This is a massive risk to reward. You can see it from all the way here from this place. So imagine getting into the trade here and you are able to hold it from here all the way up. Even if you are using the smallest lot size, this will make you a whole lot of money. So this is my outlook for the DERIV synthetic index volatility 25 1S index. You can compare this with your analysis, and don't forget to like, share, and subscribe, especially if this video has been of any value to you. So most recently, we're running a very much discounted mentorship program for a token of $50. So if you're interested, you can reach out to me via the details on my YouTube channel. Thanks for supporting me always, and cheers.